The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi, everyone. Basil Chapman here. And my pleasure to be here Monday through Friday. And it's this time, 11 o'clock till noon. And, of course, great kickoff to the day. Steve Rhodes comes on 2 hours. We got, what do we got here? We've got Friday, of course, Nico DeHaan. And then we get Daryl Martin, Dave White. You got Tom O'Brien. What a day we've got. But what a day we've got in the market. I've got a feeling that my subscribers were really surprised. I've already got some information about that this morning. For the analysis that I gave, based on the work that I do on the Chapman Wave and the monthly charts, especially the monthly chart of the S&P. And what I said was, I'm not looking at the short side of the Dow. I'm looking at the long side of the Dow. That, not only did it come, well, I had hints of it yesterday, only because at the beginning of the day, that third session should have turned into a doji type session. I don't care whether it's the end of the month buy. I don't care about anything. I'll only look. Price is the objective. And price movement as a fixed point in time of not just human emotions, of actions, human actions, gives you a better read than if you listen to the news or if you interpret that information with a particular bias, or if you've spent a lot of time looking at a particular site, whether it's long or short, I don't care what it is. If you look at that full moon. People ask me over and over, do you use astrology? Do you use any of this in your work? And I always say, no. I cannot spend all my time on everything. I spend 18 hours a day as it is on what I do. I have to respect the people who are the best in the field in that area and those areas. And we've got some fabulous people here. You've got Steve, you've got Larry Pesavento, who really dedicated decades to working with these lunar events. But what I have found is that when I know that something has a chance to coincide, look how often I would wait for that peak, D, E, or F in the Chapman Wave to say, okay, now it might come in on Wednesday, and that turns out that it is a lunar cycle. Well, that's great. It's another piece of information that will help me. It's not my prime, because I don't use it as my prime. For people who use it as their prime, that's important. And what's most important is that there was a lunar event last weekend. And in fact, it did turn out to be a fairly significant move to the upside, 500 points so far. So I respect those things. People talk about volume. Well, I use volume. I just use on-balance volume. I don't use volume per se. So you've got to know what you're using. You've got to be able to use it successfully. I'm not going to do this now. I'm only going to talk about it because I've spent so much time on this that I think it's going to behoove me to do a little work if I have just an incredibly busy weekend coming up. If I'm able this weekend or early next week, or at least in the next couple of days, if I'm able to take time to elaborate more, that chart that I sent out to my subscribers this morning to show the consistency and the replication. I discussed this at my workshop, at the presentation I gave on Wednesday night here in the Boston area at the Greater Boston in the Boston Investors Group. I discussed it right here on air earlier, about 3-4 weeks ago, I think it might have been. It's such an important thing that I think I'm going to prepare a much more detailed report on it. So I hope to have that out. But the essence is right there, what I sent my subscribers this morning. And what it said was basically that there are factors that I've looked at that suggest that if, perchance, this kind of rally, a decline pullback in the, and I mentioned this on the Dow Diamonds. Let me just go to the Diamonds 120-minute chart. Well, it broke underneath the 9-period moving average, and now is successfully, the day's young, anything can happen last day of the month. But what's going to happen? We are absolutely going to make a peak C in the monthly chart today. To me, that is imperative. That is so important. I cannot overemphasize that. Because it says there should still be a leg D to come. Now, if leg C extended, it would be even better. We'd have to wait another month before you could even possibly have a peak C. It actually turns out to be 2 months because you have to get the peak. Now we've got the peak, and we have to wait a full month of July to see whether or not there's a break to the upside. So it's really a 2-month process because May was the high. Now, let's May 22nd. So now let's look at this. What I'm looking at in terms of the Dow Diamonds, I'm going to talk about a few things that will answer questions. I'm so thrilled that so many people are using the Chapman Wave, but it takes so much time. I have to answer these questions. I try not to answer the question, but to send the chart with the answer. But sometimes it's imperative to just get a little clarity. If I go to the Dow 120-minute chart, you will see that there was a peak A from the 14,551 low. There was a peak A at 14,775.00 at 15:30. That's 3:30 in the afternoon. And then there was a peak B at 14,791.22 at 11:30 the next morning. And then there were two. There were two bars that were almost exact. 14,938.67. Then 14,938.98. That's 31 cents. So I had this, and I put it in, and what I'd said yesterday for subscribers was, there's a chance that I might have to use that. And I didn't elaborate on that. Why? Because the Dow Diamonds had, in fact, made a proper peak C. No, that's wrong. Why did I do that? That was wrong one. I meant to do this on the... There it is. Change the color back again. Let's make it blue. Look, peak A, peak B, and then Diamonds, 120-minute chart goes to 149.07, followed by 149.06, 1 penny. I don't care whether it's the New York Stock Exchange at the 8,000-something level. 1 penny makes a difference. Now, some of us, we spend so much time, especially I have spent so much time on the Chapman Wave, that for me to just turn around after, I couldn't tell you how much money it would cost, it had cost, to find out all these different techniques, because you put your money on the line, and to find out what the right answer is. For me just to dismiss that and to show some kind of dismissal of the amount of effort and work that I'd put in, and then just to throw out a number and give it out for free, I just think that's wrong. It's wrong to me, and it's wrong to my Chapman Wave methodology. So that's why I have these workshops, because you need to understand it. I need to explain it. I need for you to go through the process. So suffice to say that it is absolutely imperative that there are times in the market where you have to have some kind of flexibility to be able to say, this is what normally happens, normally meaning 90-something%. But occasionally there is a change. Everything changes, except there just wasn't that extra little momentum to go 1 penny higher, or or it went a little penny, it went penny or two higher. But everything about the characteristic of the chart formation, your years of experience, everything about it said that can in fact be called a peak. And in this case, for the Dow, I'm changing the color here. I'm going to go back to yellow, because yellow means that is the waveform that we're looking at, yellow. And that gray one over there says, be careful. This gray one says, be careful. I'm going to count that. Why? Because I don't want to get to peak C here and then have that huge sell-off when all the characteristics of the stochastic, the MACD, and everything that I look at say that if you did not notice that there was a chance to make that as a peak C, you'd be waiting for a peak C, and you might miss you might be waiting for D, and you'll see a sharp sell-off, which is exactly what we get. But look, the volatility index is at 16.20. I made a big deal out of that this morning for subscribers. I was as thorough as I could be. I don't know if I'm going to be correct. I can only be as thorough, and then the market has to take its place. So now let me go through this. Here we go. I'm going to run the numbers. The Dow is up minus 3 after pulling back 131. Was it pulling back from yesterday's close of 15,024. It's slumped down to 14,884. So I would say that that's a pretty big pullback. And where is it now? It's down 4 points. That is a fabulous comeback. There are a couple of reasons why I think that happened. Let me just move this out of the way. The monthly chart has made, the weekly chart has made a peak D. The monthly chart is making a peak C. As sure as I'm sitting here, it's one of the few times I can do it in the market, I'm saying there will be a peak C in the monthly chart because I don't see any way that the market at this point can rally 550, whatever it is. So I'm saying it. We are officially making peak C in the Chapman wave. Now the S&P, $SPX.X. Look at this. Peak A, if there's no new high bar, I call it a single leg A until I get evidence that the stochastic and MACD are already working their charm and they're able, and I call it a gray peak A. So the S&P is down, is up 1. But this morning, it was at 1,601.06. That's a huge comeback. So even if it fails later on, it's saying that there is still buying, internal buying that's going on. Weekly chart has made a peak E, and the monthly chart has absolutely made a peak C. I even said that this morning, even before the open, because that one was clear. It was clearer than the Dow that there would not be a huge run-up by the end of the day. Even if there is, it would not make a new recovery high above what? 1687.18. Let me just type that in. 16, I think that was the high, 87.18. Let me just double check. Always want to double check. Yep, there we are. Okay. So that means that the weekly chart has 1613. Right here is where the 9-period exponential moving average is going to give it the biggest shrug, and I suspect we can go bounce around here. Now, this is very interesting to me. The GLD has pulled back sharply. My opening call subscribers got a little special this morning on something that we've traded before. Occasionally very successfully, once or twice with slight losses, and we decided that we would. I decided after a tremendous amount of work, I decided that if gold doesn't make a huge power spike to the downside like it did the other day, and then a V-shaped pattern that spirals back up, so that all those people that were selling in the last many bars are just, they're out of it, they're out of whatever it is, and now they're looking back and saying, oh my goodness, if I'd only stayed in, I would have got first of all, I would have got a better price, but I probably should have been buying instead of selling. That's what you wanted. This is different. This can only be called a bounce, but it's a bounce that maybe is going to be worthwhile playing. Why? Because the dollar index, I'm a little behind in the dollar. My suspicion is not that much.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks, we're back. And just let me run the numbers down. We start with our callers, and I'm going to go to the dollar right now. Is up. Oh, I need to just do this. I got a little echo there. It's not my engineer's fault. That was mine. Let me just get that back. Okay. So the dollar is at 83.25. I'm a little behind, so it could be anywhere right now in those 20 minutes. But at this point, it's extended leg C. And that particular pattern that I'm looking at in the daily, which I discussed yesterday in the 120-minute chart, way back in the 19th of June, that kind of pattern that is now showing up said that there's going to be quite a bit of power still in the dollar, so that the euro, we're looking at EUR USD, should be going lower. And there's that 9-period moving average resistance I'm looking at up and then down. That's the way we're going to look at it. The dollar's got the exact opposite pattern. So I'm going to say that the euro can continue to be somewhat weaker. When we're looking at a couple of things I want to look at, and then we'll go to the course. So TLT right now is having a pretty good day. You remember I said that yesterday, I believe the TBT on a weekly basis should be pulling back, so we get a peak B going all the way into next Friday. So the TLT, I didn't want to treat it as a trade at 109.82. I think we've got better trades, because if this is going to work, then you're probably going to get a bounce in the golds. And the GLD, as I said before, the GLD right now is trading at 117.35, a nice candle, not a great candle, but my 120-minute chart on the GLD says, yep, ready for a bounce. Just thought you got to treat it as a bounce. Does it give you time? Yeah, it gives you time. The time I would say going into the middle of next week, try to fill the gap from the other day. 123.90 was the gap down. So 122.55 is a 9-period moving average. I'm not sure if it's going to work 100%, but this is the best opportunity risk reward. And the candle that would form in the weekly says, hey, wait a minute. Gold, in fact, could have a bounce. It could have a bounce to the 131 level. Oh, no, I'm going to do one thing at a time. It could bounce to the 122 to 125 level if everything comes into place. And there's just a perception that, in fact, gold is so oversold that traders want to at least get in. And maybe they're doing it with options. Now let's go to Mike in Ormond Beach. Hi, Mike. How are you?
Great, Basil. Basil, I wanted to ask you if you could please try to say the date at the beginning of your shows.
I always do that, but I forgot today. Today is Friday, June the 28th. Thank you for reminding me. Okay, Mike, what are we looking at?
Yeah, I'd like to follow up on what we talked about last week about the monthly on the S&P and the SPY.
Right.
And at this point, like you said, it's most likely that we have confirmed our peak C in the monthly.
Correct.
And also, do you think that we have completed the trough from this consolidation and we could be on our way into leg D at this point in the monthly, or do you think that the low that we had in the SPY of 155.73 on the 24th of June can be retested or possibly go lower? Because I'm looking for an area to start to look to buy the SPY long.
Right. So I think that's a fantastic question. What's the next question?
That's
I'm joking, because that's a question that I don't think anyone can actually say with 100% conviction.
Right.
But let me
Just to
put
get
it
your
this
idea.
way. What I'm looking at this particular point is I'm looking for certain stocks that I want to buy regardless of what my outlook is in the bigger trends. No, in the short to intermediate term trend. And I know that I'm on the right track when I put in a buy lower than the close yesterday on a particular favorite of mine, and I just missed getting it. I know that I'm on the right track because of all the stocks that technically, if there was going to be a market pullback today, there was a pullback of substance, and some of the best winners of the past few days should have given back a chunk. And so far, many of them are not giving back a chunk, and I'm kind of impressed with that. That's number one. Number two, I've always said keep it as simple as you can. The VIX, the volatility index, and I know now we have a lot of people in the den who started doing a great deal of work or sharing a lot of work. Maybe they did it before, right here in the Tiger's Den. Now, my weekly work in the volatility index says not only was there a leg D this week, but if, in fact, we close underneath the high of 2191, which was, I better type that in, 21.91, this week, if there is a close next Friday below it, it's made a peak D. That's not good enough for me. Oh, I hear a break coming up. You know what? I'd like to make it as succinct as possible. I'm going to just throw in the parameters of things that I'm looking at, and when we get back, I'll try to answer your question as clearly as I can.
Great.
We've got Mike in Ormond Beach. I'll be right back.
The Art of Timing the Trade Charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade Charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com. With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi everyone, Basil Chapman, Tiger Conditions Hour, and the Dow's down 21, S&P is unch, and I'm going to go right back to Mike in Ormond Beach in a moment. I just want you to mention there were three things that happened. One is I got an email from someone who hasn't, I'm not sure if they punching in the right code for my CD introducing the Chapman Wave methodology. There's a code that you use. It's just real easy. You type in, and that's just the only way I had of being able to know that it wasn't being ripped off and sold elsewhere. TFN is the only provider of the CD introducing the Chapman Wave methodology. So, John, I've just sent you right back the password. Just you. If it doesn't work, then you just get back to me. That's number one. Number two is, yes, I watched all those upsets in Wimbledon, and this is just like the market. It's technique, but it is mental. And these guys, they all have the capability of being fabulous, but there can only be one winner. And it's so interesting that a winner of many years can come in and be just knocked out in the first round. Why? Because we are human beings. We make these mistakes. And you know what you're supposed to do. I saw someone the other day, a beautiful lob goes up, and all they had to do nothing but actually not even hit it. They just had to touch it to the right side, and the opponent had no way of getting it. Instead, they completely missed it. I mean, this is not even tennis 101. This is tennis nothing. It's the very first thing that anybody does. You throw up the ball, you try to hit the ball. And this is a fantastic player. It happens. We're human beings. That's the reason. I mean, human beings, I had a plan to buy a particular stock. It was the most fabulous plan. I pulled the plan because I got nervous about the market going to that very sharp decline on last Friday. That was the plan. It would have worked beautifully. Now we have to renegotiate that plan. Still like it, but it'll be a little different. Not a big deal, but big enough that I'm upset. So I wanted to mention that. Now I can go straight to Mike because I can answer him and say, 2 years ago, it might have been 2 years ago, it might have been a little more. I had mentioned to someone that a colleague, a musician colleague of mine from way back, we had played concerts together very often, viola player who besides doing music, also has goes to CPA or something. So he also handles some accounts. And he had asked me a long time ago, what about this market? It just absolutely flummoxed, didn't know what. I said, if you keep it simple, if the volatility index remains under 20, stay with the market. So how much simpler can you do? This VIX index at 16.38, it's saying that's really good. If it starts to trade in the 20s, it says be careful because, in fact, we could go high. If it goes into the on a Friday, a week from this Friday or 2 weeks from this Friday, suddenly the volatility index is at 25, I would start to look at the 30s, maybe even 28 to 38 area on a huge pullback in the market as the volatility index screams. But all I can say, those are the ifs. So yeah, Mike, thanks for being patient with me.
Sure.
What I'm going to suggest is this. You want to trade the actual index itself, correct?
Yeah, the SPY.
Okay. So I'm going to make the suggestion, but I don't think there's a big hurry to do it because we're going to see some whippy action over the next week or so. But all I can say to you is that I would have a starter position, not on the short side, because I want the evidence to say that we're going to fail, and I want the evidence to say we're going to succeed. That's why I say, don't get carried away, but you could start a small, long position in something that's the equivalent of the SPY. I would not do 200%. I would not do 300%.
Right. I
would just go long the SPY, or the equivalent of being long the SPY. I'd anticipate that if today's low of 159.86 is taken out, the very next level that is absolutely critical is 159.25, the gap up on the 26th, 3 days ago. Takes that out, then we'll start thinking of the arch formation. You're going to take longer in the weekly chart, and that's what you've got to anticipate. My guess right now is that we're going to have another flurry to the upside, and if peak A, which is today's peak, from yesterday's high of 161.82 is taken out, the very next big test will be, can the SPY get into the 163, excuse me, 163.39, 163.38 was the low of the 19th. Can it get into that candle? If it gets into that candle, it will start to improve the weekly chart, which needs quite a bit of improving. My bias, if I was just looking at the weekly chart, would be to say, wow, it's going to need more backing and filling. It doesn't have to take out the low of Monday, but it's going to need some backing and filling until it can close decisively over 161.60, which was the 9-period moving average. We're in this digestive phase. But my bias at this particular point has to be that a chunk of the shorts worked and that a lot of people got more short as the market went down extra on Monday and certainly on Friday. And that's being worked off. And if it's worked off successfully, that's going to be the big thing. So I'm going to refine it even a little bit more. I'm going to say, for safety's sake, I would hold off going long or going short the SPY.
Okay.
I would wait for more evidence. If it takes out today's low, then you can trade it to the downside and you put in a tight stop and it'll tell you. If it takes out yesterday's high of 161.62, 161.82, that's a positive sign after everything that's gone on, especially if it's next week when we're finished with the quarter, we're finished with the month. We've just got a chunk that's going on that says there is support. But I have to tell you, I put a lot of weight in the volatility index. If it pushes up into the 18s, this market is going to pull back. But if it goes into the 20s, I am going to have a different perspective altogether. I am impressed with what's going on. And if the weekly makes a peak D, it isn't often that the weekly chart goes in the VIX. If it makes a peak D, it isn't. If you can go back and see the history of this, it isn't often, first of all, it gets to a peak D. And second of all, it isn't often that you have a very sharp pullback, having broken above the 200-period exponential moving average and gone right back again. There was a cluster pattern back in April, back at the April-May period back in 2012 on the weekly chart. But we don't have the same conditions at this particular point. So I'm going to refine it. I'm going to say I would hold off. If you wanted just a really short-term bias, I don't think that's you're looking for a position play. Correct? You're looking for what is the next big move and can I start my entry? Isn't that really what you're looking for?
Yeah, pretty much. I know that you're pretty sure that we're going to start a leg D up in the monthly.
Correct.
And I'd like to get the confirmation, get your parameters of when you think I ought to.
So then, if that's the case, I'm going to do this. I'm going to be, because I'm sure I've got a lot of subscribers who would like to do the same thing. We love these buy-in holds where you can buy them. We had one from November that we held up until last week and then switched to the downside. Okay. Let me do this. I'm going to make a suggestion that says, if there is a pullback into between 159.86 on the SPY, trading at 160.95 right now, and 159.25 next week, and it doesn't break below that, but in fact it just starts to make very good attempts at rallying, I'm going to say to you, start a small position, and that small position can have a little bit wider stop. I wouldn't want it to be a 5-point stop. I think that's actually too much, a 5-point stop to the low of the 24th. I would say make the stop, if it's held 159.25, make the stop 158.70. I'll tell you why. Because right in this particular phase that we're in, this digestive rotational correction phase, if the SPY is going to show internal strength, and now we're talking about the index is 500 stocks, that's a pretty good number. The V-shaped pattern that's forming should say that by Wednesday of next week, that's the day before the holiday starts, by Wednesday of next week, we should have made a new recovery high above 161.82. If that's a strong candle, that's going to say usually a good week. The July 4th week is often a very good week. That will give you a good comfort, and you can still have the same stop and let it go. And then we can assess how the weekly chart is improving. Remember, the weekly chart is the sandwich. It's the one that gets affected the most by a short-term decline in the daily. The monthly chart of the S&P is still extremely strong. The daily chart has strengthened, and in fact, considering the amount of time it's taken, it's used time more than price. It hasn't broken 153.55, the low of the week of 18th of April. And that says, look how much time we've used. So if it's going to break down, by the end of the day, we'll go back again to like a minus 75 on the Dow, S&P down -3. But if we hold really well here and close, I'd say there's a chance of a doji close. If we close within plus or minus 15 points today, that'll be really good action. So I don't want you to miss the move. I'd rather say, look, there's a chance that it could hold very well. Have a very small position now, a little bit of a wider stop than I would like to have, so make it about a 3-point stop. I think that's reasonable. And then give it a couple of days and let's see how it trades. I don't know whether I would say to you to go short. I think the bias is to rather buy for the longer term, and then I think you'll have a much better trade. Hope that helps you.
Yes, it did. Thanks a lot, Basil.
Thank you very much, Mike. Always good calls, and I hope I answered those questions. So now let's do a couple of things. I promised myself. I wrote it down. You think I'm going to look down to see what it is? Let me just see. Empire State Building. 3 buyers for the Empire State Building. What was the world's tallest building? What is the New York Manhattan's tallest building? Still from 1932 when it opened, 31 when the Empire State Building opened, Empire State. A figure. It is an icon, and that's what people want, icons right now. So, here's the other thing. So I just want to go back to that 120-minute chart of the Dow. So let's just do this. I want to talk about that technique a little bit, just to explain, because there's so many people that have asked me questions about it. How can you, what system can you have if you have something that's called a phantom peak? I got a system, believe me. It's a system that tells you that if all your technical conditions are there and you misinterpret it or you don't identify it, you can land up with a peak C minus, giving back all your profits instead of just using this one sub tool. And in this case, it's those parallel highs with just 31 cents higher from the day of the 26th of June at 3:30 in the afternoon to 4 o'clock the close. They were almost parallel highs. And if you look at smaller time frames, that's another thing you always have to. My experience with the very best, Elliott waivers are those Elliott waivers who understand how to look at smaller time frames to give you your peaks, your fifth wave conclusion, etc., which might not show up always in the larger context. And in this particular case, plus or minus, no, on the SPY, that was on the Dow. Sorry, Mike in the den asked Basil, was that a plus or minus 50 on the SPY? I would never have that kind. You can't be wrong. That's 30 points on the SPY. No. This is 15 points on the Dow. I should have made that clear. Plus or minus 15 points on the Dow. We'll see. Hey, days young. I wouldn't bank on that one. That's just my thinking. So that becomes a phantom C right there. Phantom C, and usually I change the color. What I've been doing, I didn't do it there, I just forgot about it, is I try to change the color all the way up and say, just so that it's really clear, this is a phantom peak D. Look at that sharp pullback, sharpest pullback you've had since the beginning of the run. But the MACD is still, this is what I told subscribers, the MACD, we want to be buying. One of the stocks we bought today, let's call it at 120, is at 127. It's up very nicely, but it's after a massive pullback. It certainly could have a retest of the lows. But, everything said to buy it, to be buying this morning. I did not want to think short. I don't know if I'm going to be correct. This is just the way all the charts were. Now, look at this. The MACD is still very strong. The histogram, those vertical lines. And look at the slow stochastic at 88%. It's still holding well. It's saying there's a chance that the diamonds really could make a proper peak D or leg D. And then all I do is I push this one over there, and this one becomes the dark colored one. It's a very simple technique, but this gave me the heads up to be careful. Okay. It's just one of those things that's put in words. It's a lot of words just to do something so simple. Yes. Now, there's another question here. I'll let you know. The question in the den. If you have a chance, would please look at GG. Okay, GG is Gold Core. I think that was the second question. I'll find the first question just now. Yeah, look at this, Gold Core. I mean, this is wonderful. Gold Core, look at this. Gold Core trading, gold stock, trading at 23.92. Up 4.96% today. But wait a minute. Look at the monthly chart. This monthly chart has got this huge arch formation. Remember, this is the one that I teach in my CD, introducing the Chapman Wave methodology. I spent a lot of time on this. It happens so often. With the left side price side time match that says the level that I was looking at for the first really serious one was right there at about 29.15. Well, it came in right on track on the month from the 56.31 high. I chose a particular candle to do that. Then I chose a different candle for the next one, and this next one goes out a little bit and says, this says Gold Core could rally and it could still have another turn down to come and do some retesting. So on the monthly, horrible chart. Wait a minute. On the daily, now let's do the weekly. Remember, the left side is always the daily.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, folks. I'm Steve Rhodes with TFNN.com, and the trend is your friend until it changes. A free special report is now available on the homepage of TFNN.com, and if you have money in the markets, this free report is a must. If your strategy is buy and hold, this report is a must. If you're a day trader, a swing trader, a Forex or options trader, or just getting into the markets, this report is a must. And it's the second best gift you'll ever receive. Look, if you buy a stock and the general market is trending in the other direction, you've reduced your odds of buying at the right time by 70%. Instead, let me teach you how to get that 70% Advantage Plus. The Plus is a free trial to my daily newsletter service, Mastering Probability. There's no upfront deposit, no charge to your credit card, and I compress decades of education into each daily newsletter. This is a limited time offer, so act now, and I'll teach you how to take the trend and turn it into your best friend. All the details are on the homepage of TFNN.com. Act now.
Learn about good health and fitness. Living a primal lifestyle with Nico and Paige. Next on TFNN.
Hi everyone, we're back. So for the GG, yes, the question is, you've got July calls. I love what's happening with GG right now, but this is just the very start. What you really want to see, gold core is at $23.99. It needs to power quickly, about $26.08. It needs to fill the gap, and I suspect it's going to get close to $25.60, maybe $29.60, maybe the 26s. That's when you've got to take your gains. In fact, if there's a very big spike Monday or Tuesday, that's when you want to take a chunk of your options off. But I'll be back on Monday so we can talk about it then. First of all, congratulations, Zip. That was a great entry. Let's go to, we've got John in Philly. Hi, John. How are you?
Good morning, Basil. Thanks for that thorough S&P and Dow Jones update. I was interested to hear that. My question for you today is on KRE. It's a regional bank stock ETF. It is making new highs. I am wondering what the counts on the weekly and monthly are on the Chapman wave and what that portends to answer the question, how much further in price and time can KRE go?
Okay, so let's just do this real quickly. I thought I'd done it. I've got it on my other charts, but I'll do it here quickly. A, B, C, D, E. That's A, B, C. This is a secondary one, and I'm calling that F. Yeah, so this is what I'm looking at here. There was a peak E and then a peak F in the weekly charts. I'm calling that an F with a cup and ladle. This is a Chapman wave cup and There we go, right there. This is the drop bucket formation, and it pulls back to the 200-period moving average. I'm going to count the latest low underneath the 200-period exponential moving average in the weekly chart, folks. If you're looking at the charts, this is it right there. That low of the 16th of November at 27.20, that's the week of the 16th. I've gone peak A, B, C, D, E. I'm going to call that a peak. And I'm also going to suggest very strongly that this is leg B up here. I don't think this has got any characteristics of a G. This looks like a B, a very strong move up. That's another reason when I looked at these different areas, I'm finding strength where I should have found weakness. These are the regional banks. This is KRE, Spider, S&P Regional Bank. It's actually a little weird. It has some horrible candles as if they were price errors, but in fact, I know those being the very, very sharp spikes.
Can I interrupt you on that? Just answer that.
So I like this. I'm calling this leg D in the monthly, and if this leg here trading at right now at a recovery high, 34.02, if it can get even into 34.20 was the candle of the week of the 28th of November 2008. If it can close next Friday into that candle, preferably above it, into the 20 and 35s, then all of a sudden I'm looking at the 200-period exponential moving average of 37.78 as being a focal point, a magnet point over the summer. That's really a big target. The quicker we get there, then the quicker the support gets strengthened at 32, between 32 and 30. I like what's going on. I think this is fabulous action. I can't be bearish when I'm seeing it, in other words. I can be stock-specific bearish, but not overall. Hope that helps you. Is that kind of what you were looking for?
Thanks very much. I do appreciate that.
Great. So and now I always have to say, what if I'm wrong? This is leg B up in the daily. I'm wrong if it closes at 34.03. If on Tuesday afternoon or Wednesday morning it is closed below 33, I got to say, oops. I got to rethink this, but at this particular point, I just have to go with this being so strong, leg A and a leg B. This looks like a 1-to-1 that will take you from the low of 29.73 to the high of 33.49. So let's call that 20. Let's call that 4 points. So 4 points from the low of 31.91 would be 35. Yeah, everything works towards going towards 35, 50, 36. Hope that helps you. Thanks for being here, folks. Have a fantastic weekend. Don't forget my services, the opening call. You'll get that report on that SPY on the S&P. Very important. Have a great weekend. Stay tuned for Nico.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.